Digital first is key to cope with challenging conditions. In Australia, high customer adoption of digital coupled with regulated open banking presents significant opportunities for banks with capabilities to adapt and offer a whole lot of solutions for personalising at scale. Joining us now is Malcolm Macnaughtan, Regional Director, Australia New Zealand at Backbase. Thank you so much for your time, Malcolm.
Good morning. Nice to be with you.
Yeah, we hear a lot about neobanks that have been coming up. So many have popped up over recent years. Are they really just a branding exercise, or talk to us about the foundations behind them?
Yeah, no, it's certainly not just a branding exercise, right? The difference that we see between the well-designed neobanks is they are a business that's designed from the outset to distribute financial products through software and the internet. And that's a very different kind of business from a bank, a traditional bank that was designed to distribute financial products through branches, through arrangements captured on paper, through face-to-face interactions. So completely different, and that foundation gives them a whole different set of skills in this, or capabilities in this era we're entering.
It's a really interesting time for banks and neobanks and new banks and banks that are focused on digital, as you say, development through software of their products, because the big banks are trying to become like that, and it's a lot harder for them. They've got branches that they would need to close. They've got a lot of legacy issues. You think of the TV networks or big airlines, they're in the same boat where new players come along, they're able to essentially get in there, offer what was good, but offer something which is better. I'm with one of the legacy banks and just have a shocking time dealing with them, from everything from the fact that they were last to accept Apple Pay, etc. And you just kind of roll your eyes and say, get with the program. Talk to us about the threefold threat that these incumbent banks currently face.
Yeah, so there is, what you were talking about, which is this challenge of renovating their IT landscape so that it, can cope with the demands that we as customers have today, right? We expect, like you were just describing, a different kind of experience managing our money than we used to have. And that is very challenging. The bigger the bank, obviously, the bigger the legacy IT estate they have. On the other hand, they do have, the bigger budget. So yeah, it's interesting thinking about the challenges across the spectrum of sizes. At the very top end, you've got CBA now talking about spending at least $1 billion every single year, on their technology.
But when you talk about spending $1 billion, my mind straight away goes to saving $1 billion, because that's exactly what will be happening here, right? They'll be moving away from things like branches. Before COVID-19, you would walk into a shop, and if you were buying a coffee, the shop attendant would look at you with evil eyes if you were going to tap and go that coffee, because obviously they were concerned about the costs that were passed on to them by the banks. These days, I've not used or seen cash for some time, to the point that for the first time in my life, when I leave the house, I don't take my wallet. I just need my phone. It's all on there. I'll probably never see cash again. So when you're in a situation like that, you've got ATM costs, you've got obviously the bank branches costs as well. How can banks refocus their resources, still knowing that there is a sector of the population that rely on ATMs, just as Telstra found that when they tried to remove payphones, it didn't go down well?
So I think there's a few parts to the answer to that. So one, of course, is really understanding what your customers want. And that's a skill that banks, especially in this digital era, have got to develop. So the ability to engage with customers and understand how their expectations are evolving and how they want to interact with their money. On the other side, there is, working through that legacy set of IT capabilities that they have, and renovating that. And the kind of agility that banks need today to respond to our changing expectations can only come from the right kind of IT architectures,
I understand. I guess the question that I was posing, though, was, and you mentioned it yourself, about how you have a lot of the banks who need to understand what their customers want. The challenge is because we're in a transition period, your customers want different things. Some people still want the bank. And if you cut those staff because you're spending the money on your IT, things that people don't see, right? Commonwealth Bank could spend $1 billion on IT infrastructure, but from our perspective, we're still seeing the same front page. We're still having the same app. We're still seeing the same things. They're just changing things inside about how their computers operate. I think Westpac's gone through some huge things there. So when we talk about listening to customers, how much is it listening and reflecting what your customer wants right now? And how much is holding their hand and saying, look, we're not going to need as many ATMs. We're certainly not going to need as many bank branches. It might not be popular that your bank is closing down in your local town, but we're finding that 90% of our customers are not using their bank branch anymore. They're online, and you, as the other 10%, cannot have a bank branch, which is essentially doing a half-baked job of looking after you because the staff just aren't there anymore. They've cut staff. What's the point of having the branch? I guess that's where I'm coming from.
Yeah, so there is, I think it's about preferences, right? And different things shape preferences. And certainly some of that segment of the customer base that, today are comfortable with the more traditional way of banking. For some of them, it's just because they haven't tried it. And I think that's where this crisis has been interesting and why it's really accelerated this move to digital. Is a lot of people that, where they had the option of the branch or could go see someone, they would always choose to do that. And so they never experienced the convenience. And, I'm thinking of some in-laws right now who prefer to go and pay their bills over a counter because that's what they're comfortable with.
Yes.
Yeah. So the thing with digital is, if we, and I think that's, to your point.
Is that where Australia Post comes in then? Is that the kind of point? Like when I go to Australia Post to drop off a parcel, particularly in a country town, you have a lot of people over a certain age who are there to pay their bills, and that's how they rather do things. So do the bank branches need to work with Australia Post, for example, to manage that transition while the banks now focus on essentially competing with these digital entrants? Because it's an uphill struggle, isn't it, for a lot of these new entrants in these digital banks. They're trying to shake up the market. There's only the modest share of the pie that they can actually get. And so much of their money has to be spent on marketing to tell us why we need to get away from the big banks.
Yeah, I think they do. This is a challenging time for them because, most of them right now are buying customers, right? They're offering higher interest rates.
Yep.
Sign up and made, those sorts of things. And there is a question about how long investors will continue to bankroll that without seeing signs that the neos are, making progress towards sustainable business models. There's probably only one or two of the neos here that are really showing progress there, Judo probably being the best example of that.
Well, what's the key to their success? Is it being first, or is it a product offering, or is it marketing in your view?
It's all of those things, but it's really, most of them start their business with a hypothesis about how they can deliver greater value and win customer share. And I think the important thing, like with any startup business, is as quickly as possible to get that proposition into the hands of the kind of customers you're targeting and validate that indeed they perceive that value there and they will choose to do business with you. And so that's where I think some of the neos in this market have struggled, where they've had a vision and then, 18, 24 months on, they're still kind of delivering, that first version of the experience. And it's going to be harder and harder financially to fund, that kind of 2-year experiment. They really need to get going much faster, get something into the hands of, the customers they're targeting much more quickly, and then iterate rapidly from there based on what customers are telling them is valuable.
Yeah, I think the biggest thing from my perspective anyway when it comes to swapping a bank is all of those direct debits. I know that the RBA is working on a system to make it a bit easier, but I think I have 5 bank accounts with different banks that have signed me up over the years so I can get my free $10. The $10 is still sitting in the account. Malcolm, appreciate your time. Thanks so much.
Thanks very much.